and welcome to BQ Prime. While retail inflation has brought some much anticipated relief, coming in at an 18-month low, industrial production has fallen to a 5-month low for March. To share her insights on both of these, we're joined by Aditi Nayar, Chief Economist at ICRA. Ma'am, thank you so much for taking time out.
Thanks, Pallavi.
So, your quick thoughts on inflation as well as industrial output.
So we had projected the CPI inflation to come in at 5%, and most of the categories did come in line with what we had projected. There are two which came in a little bit lower. One is food and beverages, and here, the positive really has been that we had unseasonal rainfall in April. And so the normal increase that we see in prices of perishables in the summer months, that has been delayed a little bit. So possibly now that the full force of the summer appears to be upon us, there is still a possibility that vegetable prices may start rising very quickly, and that is something that we need to watch out for. Even though right now I would say that for April for certain, food inflation came in lower than what we were projecting. And the other item is fuel and light, where also we were pleasantly surprised, but all of the other categories evolved as we had projected. So core therefore also came in broadly in line with what we had penciled in. Now, if I look at what this means going ahead for the immediate month, like I said, the big watch out is what happens now that the temperatures have gone up. Then, of course, we get into the monsoon. What is the onset like? How is the first month? That will also have a bearing on food inflation in particular. But I would say that we probably want to look at CPI inflation remaining in the range of 4.75% in the next 2 months as well. And therefore, we now see a very high likelihood of a pause coming in from the MPC in June. After that, what happens with the El Nino, how that affects food inflation, that may be further sort of, toward the second half of the monsoon season. And as of now, that's what the IMD has said. So a lot of that negativity that we, need to be prepared for. It may not manifest right away, so we'll have to just sort of be watchful going ahead. But as of now, yes, I would imagine that we're looking at a pause in June.
So, before we move on to industrial output, actually, some of the items, like you mentioned, that there has been a decline in food inflation. In fact, it was even lower than what you had estimated. What was also noteworthy was that a lot of items which were seeing sticky inflation for quite some time, cereals, for instance, other pain points as well, milk, for instance. There has been relief on an annual basis, at least. Even in these categories. So is that particularly heartening?
I would, when I looked at the month-on-month numbers, there were almost an equal number of items that came in below what we had put in. But there were quite a few that surprised negatively as well. Like pulses, I would say that the number was higher than what we had expected. Fruit, again, had already, that summer uptake was there in fruits, but not so much in vegetables. So I would still remain cautious. I don't think it was an entirely positive set of disaggregated numbers on the food side. So we do need to remain watchful. And I think milk is again one of those areas that is going to remain a pain point going ahead. A lot of the downside in food came in from edible oils. And sugar, on the other hand, I think we saw a little higher number than what we had projected. So like I said, many of the items sort of offset each other. I think the really big positive surprise was probably edible oils.
Absolutely. But I do want to know a little bit more on why you expect inflation to remain fairly range bound. Is that expectation also derived from the base effect?
Absolutely. So April is the peak of the base effect, and then we start to see slightly lower numbers in the May and June of 2022. And therefore, as of now, I would suspect this might be the bottom for the next few months. So here to slightly higher is what we're expecting in the next 2 months. And then, of course, the how the monsoon evolves will also start to play a big role.
Absolutely. So moving on to industrial output, there seems to be it's at a 5-month low, and several categories. Manufacturing, for instance, seems to be a concerning figure. What have you made of that?
Well, I think manufacturing was probably what really led to the number being so much weaker than what we in the market were penciling in. Our forecast was 3.3%, and so the IIP really did come in far below that. Now, the IIP, I'm sure I've said it to you before, is very difficult to predict now, and it does sort of show a lot of surprises in either direction if we look at the trend over the last couple of years. So, I tend not to get overly perturbed by what the IIP tells us on the downside. I also think that part of the contraction in the consumer durables and non-durables is durables, particularly part of it is coming because of export categories, so it's not entirely domestic. But we still maintain the view that domestic consumers are prioritizing services over goods, and IIP only captures goods. So with GST collections being so much higher, perhaps it is services that people are going ahead and spending money on. So maybe that might be sort of, the answer to the divergence between what the GST numbers told us and what the IIP is telling us.
Okay, I received your note just a few minutes back, and you did highlight that the figure is also a little bit in line with a lot of other high frequency indicators, which have seen a little bit of a slowdown relative to March, relative to the previous month.
No, I think that was for April relative to March. So that's the
Right.
output that we mentioned for the IIP. So that's why I've written that we expect the IIP to remain sub 2% in April as well.
All right. So moving on to monetary policy, despite the fact that we remain cautious on account of how the southwest monsoons pan out, with today's figure, like you've already touched upon, the bar for further rate hikes is definitely even higher still.
Absolutely. I think now it would take a very major negative surprise for another rate hike to come through. I would say, very high likelihood of an extended pause now. Pivot to rate cuts is quite distant. Cannot completely rule out one more rate hike if things go terribly wrong. But I would imagine that there's a very limited likelihood of that right now. Fairly high likelihood of an extended pause.
All right. And moving ahead for the next few months, like you said, you do expect a little bit of weakening in high frequency indicators.
So what we saw in the month of April was a weakening in the high frequency indicators. Broadly, we do expect that on the high frequencies, a few things, and no, one more reason for that. April we had so much rainfall, and that does have an impact on many of the items that we track within the high frequency basket, like electricity, for example. The demand for electricity always goes down from the agri sector, and in some months from the household sector, and in some months it goes down from the agri sector as well. So April may not be a very typical high agri consumption, month. I don't think there would be too much of irrigation usage during April. But households definitely with cooler temperatures, their demand for electricity would have gone down. And coal again does tend to see a dip. Mining in general tends to see a dip. Possibly even some bit of an impact on things like transport. And this would play out, would normalize in May and June as we get back to a more normal weather pattern. So it's not something that I expect to have an protracted negative impact on the high frequencies going ahead. But yeah, I mean, we are looking at a GDP growth of 6% in FY24. And we're looking at a downside of up to 50 basis points if the monsoon does end up being subpar, especially, what is the current IMD expectation that there will be an El Nino in the second half of the monsoon season. So we could expect a downside of up to 50 basis points below our baseline of a 6% GDP growth.
All right. So all in all, would it be fair to say that the outlook for the Indian economy in the next few months continues to remain broadly resilient? Conditional, of course, on factors including the southwest monsoons at this juncture.
Monsoon and external demand as well. So I would still say that it's going to be very mixed. Some sectors probably will remain resilient. Services will lead the growth this year as well. We're hopeful that government capex will be front loaded. instead of being back-ended, that is definitely something that can drive a better than expected GDP growth number. So we're still cautiously optimistic, I should say.
All right. That's about it from my side. Thank you so much for taking time out.
Thank you, Pallavi.